welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the D Street. On the show today, we are going to be focusing on a variety of topics. First up, we're going to be focusing on the entire buzzing IPO space that has gone past so far in 2025, and of course, look at what's coming ahead in 2026 as well. Now, when we look at the 2025 year, about 100 main board companies have already launched their IPOs and raised funds via public. About 1.64 lakh crore rupees has been raised by the investors as far as the IPOs are concerned, making it one of the busiest seasons of IPOs. But have retail investors truly made money here? That's something that we are going to be truly focusing on as well. Now, when we also look at 2026, will that be another blockbuster year for IPOs? Will there be more opportunities rather than the secondary markets in the primary market space? That's another question that we will be focusing on this show as well. Apart from this, we will also be focusing on SEBI's latest announcement as far as the mutual funds TER ratio is also concerned. We're going to be trying to understand whether any relief has been extended to the investors by way of the reducing of the expense ratios, and will that truly make mutual funds cheaper for you and I? That's another thing that we're going to be focusing on. And of course, a lot of buzzing stocks like Meesho, which has again turned out to be a blockbuster IPO from this season, in fact doubling investors' money from the IPO price in just 7 days. That's something that we are going to be focusing on. We will also focus on a recently listed stock, and that is Ola Electric. That is in fact turned out to be a big pain point for investors. It came amidst a lot of fanfare, but right now has hit fresh record lows as well. So we are going to be focusing on all these topics today. Let's welcome our guest on board. Sunny Agarwal joins in. He's the DVP, Head of Fundamental Desk at SBI Securities. Warm welcome to you, Sunny. Good to have you with us. Let's take a first general comment on the markets, the sentiments that you are seeing right now. We have given up the 25,800 mark yet again, and now we have slipped below the 25,750 mark as well. So the markets are slowly and gradually inching lower, selling pressure, keeping the sentiments weighed down. How are you looking at the markets?
Yeah, good morning, Sakshi, and thanks for having me on the show. I think yes, definitely there is a lot of selling intensity which has increased during the last 1 or 2 weeks, especially in a broader market, mid and small cap. And obviously, it seems to be on the back of likely year-end selling or adjustment of portfolio by foreign institutional investor, coupled with rupee hitting a live low at closer to 91 levels. So that has obviously scared the existing investors who have already flowed their money in the domestic market. So they are facing losses on that account. But having said that, it seems that now most of the negatives are in the price. So we have already seen a persistent selling by foreign institutional investor, rupee hitting a new low, and another big event, which is the Bank of Japan policy, which is due on tomorrow. So there again, street has already discounted that 25 basis point rate hike is something which can come through in by Central Bank of Japan. So I think maybe till 25th of December, the selling should reduce from foreign institutional investor. And then from the next year onwards, as they come back with a new strategy, I'm hopeful that fiscal year 26 or calendar year 26 is likely to be much better in terms of fund flow and from FII, and that should support the market. And talking on a basic data points, obviously earnings are now turning supportive. Seems that next 8 to 10 quarters will be the period where Nifty 50 basket will report a double-digit earning growth. So that should be supportive for the market. Valuations have also turned reasonable. So if you look at last September 24, when Nifty scaled new high, at that point, the Nifty was trading at 1 year forward price to earning multiple of 23 times, and as we speak, it is trading at 20 times price to earning multiple. Moreover, the premium to the MSCI emerging market indices has also reduced. So in the last September 24, the premium was 80% in terms of valuation to the MSCI emerging market indices, and that has now reduced to 47%. So I think all the factors are pointing towards a better calendar year 2026. Obviously, it is not a top-down approach which one should follow. Obviously, it's a bottom-up approach which investors should adopt and have to identify certain companies which are likely to deliver a better earning growth going into the calendar year 2026.
Okay, got that. So, Sunny, let's start off with our main topic today, which is the IPO space now. As I pointed out, we already have about 103 main board IPOs that have got listed on the exchanges. The upcoming and ongoing are about five. So, in 2025, you would have already seen 107, companies are raising funds via IPOs. Now, when we look at which are the companies that have actually, performed well on the exchanges when it comes to the IPOs, well, on the listing front, we've seen about 49 companies listing with gains. That's where investors have made money on day one of the IPOs. But at the same time, equal amounts of companies or equal quantity of companies, 49 companies have actually seen a listing loss as well. Now, when we actually look at the kind of companies that have truly made money, we have about 8 to 10 companies that have truly created wealth when it comes to the IPOs. Those are the kind of years and the IPOs that have actually come in. It will give you an idea of what has happened over the last 5 years. In 2025, we had about 63 IPOs, and going forward, we are now only increasing in number as to the number of IPOs that are actually coming in. So let's talk about the biggest IPOs that have come in terms of the listing performances. First up, let's talk about the best performing main board IPO of 2025. That's Stallion India Fluorochemicals. And we have actually seen that it has emerged as the best performing one. The stock was issued at 90 rupees, and we actually went on to see that the stock went on to create a 154% kind of a listing move, as well as the gains that were seen right after. Aditya Infotech came in next. You saw a 130% kind of a rally on that one. Ather Energy gave a 101% kind of a gain after getting listed. Meesho has also doubled investors' money from the IPO price. It's already up by about 96 odd percent. When we also look at some of the other names, Belrise Industries, about 78% of a rally from the issue prices, what we've seen. Anlon Healthcare has also given about a 56% rally there. So these are some of the biggest performers in terms of the returns that we've actually got. Let's try and understand from you, Sunny, out of these top 8-10 names that we have just taken, which have actually created a lot of wealth for investors, what would you really look at even going forward from here? Of course, all those investors who were lucky, who got these allotments, they have sat on a good amount of profits. What about those investors who are looking at these companies now? Do you think they will have the wherewithal to continue to perform even in the new year? Any one of these top IPOs that you see on your screens?
Yeah, definitely. I think a few of the businesses which are focusing on auto as a sector seems to be well placed, even from a next 12 to 18 month perspective. So, a case in point, Belrise Industry, post IPO, we have seen a good earning delivery, and at the same time, the kind of strategy which the company has adopted to diversify from two-wheeler segment to passenger vehicle segment, and with an onboarding of clients, it seems that company is well placed to deliver a kind of 15 to 20% earning growth over the next 2 years. And we believe the fair value of the Belrise is closer to 180 to 200 rupees. So, keeping that price target in mind, investor can continue to stay remain invested in a company like Belrise.
Okay, got that. Viewers, we've also seen 1.82 lakh crore rupees, in fact, that has been raised via IPOs this year. This is the record fundraising that we've ever seen in any calendar year via IPOs. So it's not just the number of IPOs that are increasing, it is also the kind of amounts they are raising via IPOs. That's also inching to record high levels. 1.82 lakh crore rupees have been raised already. Now, this is, of course, the highest in the last 5 years, and it's on record the highest fundraise as well. Sunny, going forward as well, do you see the momentum growing with respect to the IPO fundraisers in the new calendar year as well?
Yeah, seems to be the case because till now we have not seen any big failure, at least in terms of listing. So I believe till the time the listing is decent or there is slightly listing gain, or there is an historical case study of good listing gain. A case in point, latest Meesho has issued a double post listing immediately. So I think Till the time there is no setback for a few large IPO, I think IPO market will continue to remain buoyant and seem that again 2026 will continue to be a better year in terms of IPO.
We will come to 2026 in a bit, but let's focus on what truly happened in the IPO fundraising this time around. This time, we've actually seen on course the record kind of OFS led fundraise that has taken place. Remember, there has been an OFS boom. OFS in IPOs have crossed 1 lakh crore rupees in 2025. This is the first ever calendar year on record on Dalal Street where we have seen higher OFS. This actually means that the direct cash has gone to the promoters and the selling shareholders rather than going to the company. This has been a trend that has been noted this time around. So PE, VCs, the founders that have opted for either full or partial exits when the IPO came into fore. Almost 63% of the IPO proceeds have routed to existing shareholders. This highlights strong exit opportunities and the investor demand amid investor demand as well. The new age companies have actually shown a higher dominated OFS heavy IPO as well this time around. Marquee listings have driven the monetization cycle in 2025 too. In fact, if we look at the year 2025, the amounts that were raised via OFS was 1.11 lakh crore rupees. That's where the money has exactly gone to the selling shareholders. In the year 2021, there was about 75,394 odd crore rupees that was raised via OFS. But this time around, in just the 5 years, you've seen gradually an uptick, and now it is at 1.11 lakh crore rupees as well. So that clearly goes on to show that there is a strong demand from investors, and tapping onto that demand are the early promoters, early investors looking for an exit opportunity. Sunny, how do you really see this? Do you believe that increased amount of offer for sale that has come in the IPOs this time in 2025 has in a way given lesser opportunities to fresh retail investors to make money?
Yeah, I think again it's a part and parcel of private equity investment cycle wherein usually they tend to cash out after the investment horizon of 6 to 7 years, and most of the early startup kind of businesses tend to have an pre-listing funding, multiple funding rounds, and those investors are bound to encash on the better performance of the company since the incubation of the business. But obviously, I mean, if I look from an retail investor perspective, earlier most of the IPO money or fund mobilized through IPO used to go for wealth for asset creation, and now since the promoter are cashing on to this money, there may be a temporary setback in terms of the new asset creation. But I am hopeful that with the money which has been taken off the table by the private equities or promoter, they will go and again redeploy those money in some other businesses and create the asset which will help boost the economic growth. So I think again a kind of win-win scenario for both retail investor as well as promoter. On one hand, retailers are getting opportunity to participate in fast growing businesses. On the other hand, promoters or private equities who are in cashing on the early gains, they may try to redeploy those money and create a new institution or help support a new businesses going forward. But ultimately, retail investors need to be cautious in terms of identifying a good businesses, trading at a reasonable valuation, and need to not chase the momentum immediately post listing, because ultimately it is a track record of post listing 2 3 quarters numbers which will clearly give an which will clearly bifurcate the main from the boys, and the companies which are able to deliver on the growth promises and are able to execute their growth strategy well, those will be rewarded in medium to long term.
Actually, let's actually also focus on understanding when it goes on in 2026 also. Do you believe the OFS led fundraisers to continue to be on a boom?
Yeah, likely. I think in case new age businesses or startups are getting listed, obviously OFS will be the part and parcel of the issue whatever issue which are hitting the street. And in case there is capex heavy businesses which require a capex either to which require fund either to repay the debt wherein the capex is about to complete, or they want to say, increase the capacity. In that case, the fresh issuance is something which may hit the stick. So again, I think the trend of OFS plus fresh issue, that trend is likely to continue during calendar year 2026.
Fair point. Okay, let's actually look at the 2026 kind of a picture as to how should you prepare yourself for the IPOs that may be coming in into the new calendar year. Now, it's given to understand a lot of data companies have suggested that the record fundraising may continue in the new year 2026. This time around, the estimate is anywhere between 2 to 2.5 lakh crore rupees of fundraise that could take place in the new calendar year 2026. We are at 1.8 lakh crore rupees already, and now it could surge to 2 to anywhere between 2 to 2.5 lakh crore rupees in the new year. Now, funding boom may remain intact. However, we will have to see whether the listing pop will continue, and of course, the long-term capital source also needs to be looked at. Now, let's actually look at the pipeline snapshot. About 84 companies have already got an approval from SEBI for their DRHPs. So that means 84 companies could be looking at listing their IPOs in the new year. Now, the fundraise target by these 84 companies is estimated to be at 1.14 lakh crore rupees. There are another set of 108 companies that are awaiting approval from SEBI to bring out their IPOs as well. These 108 companies are estimated to look at a fundraise of 1.46 lakh crore rupees. So together 1.14 lakh crore rupees plus 1.46 lakh crore rupees will create anywhere between 2.5 lakh crore rupees of anticipated fundraise that could be coming in. So brace yourself, there is much more action in the IPO space that's awaited as far as 2026 is concerned. Now, of course, when we look at such a large fundraise from the primary market coming up in 2026, Sunny, the big question comes in whether the opportunities will be more in the primary market space vis-a-vis the secondary market space, and exactly how should investors be prepared for deploying their money that they have at their hands, at their disposal, right at the beginning of the money. How should they be planning their funds going forward from here?
Yeah, obviously, I think increase in supply paper through primary market obviously hurt the secondary markets in terms of fund flow, as majority of the fund get diverted toward the primary market. And obviously, as an investor, I need to be very selective in terms of applying either in the primary market or deploying that fund in the secondary market. So ultimately, the crux is decent valuation, solid businesses which can deliver a consistent growth and which are trading at a reasonable valuation. So ultimately, that should be mantra, either it is the primary market or secondary market. The safety of the capital, risk-adjusted return is something which is one of the most important aspects which retail investors should keep in mind.
Okay, got that. Now, amidst all these IPOs, which are the big names that could be coming up? There is an anticipation of Reliance Jio, and there's an expectation of a potential 10% stake sale. That could be among the largest IPOs that could be coming in 2026. Already an indication has been given in by the company Reliance Group in their previous AGM, where they indicated in the second half of 2026 is when they could be looking at bringing the Jio IPO. So that's the big one that everybody will be watching out for. This has been a much anticipated IPO for many years now, and finally we may see the light of the day in 2026. The other big IPO could be of National Stock Exchange itself. This is another one of the biggest anticipated IPOs, and it seems that in 2026, now that most of the issues have been resolved at the company's end, the path has been cleared well for the IPO coming up, and there is a larger expectation that this time around in 2026 you could finally see the NSE IPO getting listed. Already in the unlisted space, the valuations have soared way beyond the imaginations. There is a dearth of shares available for investors to purchase even in the unlisted market, and that only creates a lot of anticipation that we are seeing. Apart from this, we could also be looking at global giants like Flipkart and PhonePe could be filing their IPOs and listing their IPOs as well. So globally as well, big players could be coming in. Of course, Flipkart is also backed by a global giant, and PhonePe is a global giant. So you can also look at all of these companies also coming in there. Sunny, which are the IPOs that you are clearly keeping a keen eye out on, and where would you really save up on the money to invest in these IPOs?
Again, Sakshi, to be very honest, I don't have list of companies which are coming out with an IPO. But obviously, the big ticket or larger businesses like Reliance Jio, which have got a very solid track record of delivering a profitable growth, and again, one of the largest company in the Indian corporate history, if that gets listed, obviously the response will be phenomenal, and the kind of growth which all such businesses are delivering, seeing that all such issues will be lapped up, including NSE, although we have seen some reduction in the overall exchange level volume because of the weaker market sentiment or change in regulation. But ultimately, I believe the capital market as a story is still young, and over the period of next 4 to 5 years, there is a probability that volume will continue to inch up across multiple products. So I think exchange, obviously, NSE being the largest stock exchange in India, I think that is something which is the most awaited IPO for all the institutional as well as retail investors.
Okay, fair point. So that's as far as the IPO space is concerned. I hope viewers, you're now equipped by understanding what has gone past, where are the opportunities still existing from the recently listed stocks, and what to expect from the IPO world in 2026 as well. Let's move forward from the IPO space and now focus on the recently listed stocks as well. Let's talk about Meesho, for instance. One of the IPOs that's been a blockbuster, had a good listing. In fact, it's nearly doubled investors' money in just 7 sessions. Now it's trading at 210. Just now it has fallen about 2.7% lower in trade, but in the last 7 sessions you've only seen the stock go higher. Yesterday it was at a 20% circuit as well, and you have seen the company's co-founder Mr. Atre also becoming a billionaire on that front. In fact, with today's move that we had added up to, the stock's market capitalization also went beyond $1 billion as well. So that's exactly what you're looking at on Meesho as well. The market cap has crossed the 1 lakh crore rupees mark as well. But when we look at the operating losses, they are still staring at 555 odd crore rupees. There is still a lot of question mark as to whether the cash burn will continue and whether this kind of a move will sustain on Meesho as well. Because yesterday we had seen a brokerage house penciling in a higher target of 220. I think it was UBS that penciled in a higher target for Meesho, and that furthered the momentum on Meesho as well. Let's try and find out from you, Sunny, how would you look at Meesho now? First sign of cautiousness coming in after that considerable amount of rally. What would you say now?
Yeah, I think now at the current market price, now seeing the stock is fairly valued. So one has to keep in mind that at an upper price band, the stock was trading at closer to 4 to 5 times EV to sales multiple, as compared to between 8 to 14 times other businesses which are trading on EV to sales multiple. And now post doubling of the stock, the EV to sales multiple has expanded to 9 to 10x, which is in line with other peers also. So I think that is something I believe now the business is fairly valued, and going forward, ultimately the path to profitability is something which it will keenly look forward to. The advantage with a Meesho is that since they are operating a no commission model, so there is still scope of earning a significant money out of even charging a minuscule amount of closer to 1 or 2 rupee per order. So on an annualized basis, they are catering to closer to 240 to 250 crore order number. And even if they are able to charge 1 rupee per order, that will add closer to 250 crore of EBITDA. And at the same time, company is a free cash flow positive company despite of making PAT losses. So I think all these factors have given a lot of comfort to the investor, and are hopeful that going forward, ultimately path to profitability is something which will be delivered by the promoters of Meesho.
Let's also talk about a recently listed stock, an IPO that came in amidst much fanfare but has now seen a lot of pain as well, and has given that pain to investors. Ola Electric. The recent developments show that the promoters is selling his stake consistently. This is the second day in a row when we've seen Bhavesh Agarwal sell about 4.19 crore shares, about 0.95% stake as well. The deal value is 142 odd crore rupees. The total stake sold is 1.5% as well already. The total value of that stake that has been sold is 234 odd crore rupees, and the promoter stake now is at 36.78%. The stock is at a fresh all-time low of 31 rupees, 31.8 rupees. It's already dropped sharply from the issue price itself. It's more than halved now. What do you say about such stories? Investors believing in the new age, companies, and yet facing such pain in these IPOs and therefore after listing.
Yeah, I think ultimately the street is very clear that they would like to see the consistent profitable growth. Now, whether the business is a new age business or a well-established business, in case the company is unable to deliver profitable growth in an increasing competitive environment, I think the street will definitely punish those companies. And that's the case with Ola. I think at the time of listing, the market share of Ola in the electric two-wheeler space was closer to 44-45%. And as we speak, that has reduced significantly to the 18% because of a lot of negative news flow around the services and the product quality, so on and so forth. And that has led to the investor dumping these company stock of Ola Electric. So ultimately, a path to profitability and ability to sustain a profitable growth is that these are the two important parameters which it will look forward to in any company, whether it is the new age company or whether it is a well-established business running from last 10 to 15 years.
Okay, fair point. Let me also now go on to understanding another aspect before we let you go, and that's by way of what SEBI has done, and it impacts a large part of the mutual fund investors at large, Sunny. SEBI has lowered the base expense ratio limits. SEBI has this is across the categories. For index funds and exchange traded funds, ETFs that is, the revised base expense ratio has been capped at now 0.9% compared to earlier 1%. For the fund of funds largely investing in the index funds or ETFs, they also have a 0.9% kind of a cap. We also do see that the equity oriented schemes will see their base expense ratio reduced to 2.10% from 2.25%. Close-ended schemes will also see tighter caps going forward. And all of these limits, what do they really mean for the large mutual fund investors? Will finally mutual fund investments turn cheaper for investors who've been, investing via these, brokerage firms where the expense ratios are now coming in lower?
I think again a win-win proposition for at least unit holders. So ultimately, the key customer for any AMC business is the unit holder, and if unit holders are able to generate extra return because of either fund performance or because of lower expense ratio, obviously the longevity of the fund or ability to attract the new incremental fund through SIP and lump sum is that is continuously maintained. Regarding yesterday's regulation, I think it has come better than expected. So earlier there was an expectation that total expense ratio will be reduced by to the tune of 15 basis point. That has came in at 10 basis point. So overall net impact on the total yield for AMC business will be to the tune of 1.5 to 2.5 basis point, and within that I think again majority will be passed on to the distributor in the terms of lesser sharing of commission and on the distribution business. So I think net impact is very negligible on AMC business in terms of profit, maybe 3 to 4% impact, and that will be taken care of with an better market sentiment and fresh inflow. So I think overall the development is positive from an AMC business perspective, and that is the reason we are seeing a positive reaction in the market.
Okay, Sunny. Thank you so much for your time then, Sunny, and for sharing your views on the markets, on variety of topics that we've discussed. Viewers, I hope this has truly helped you out in understanding what's truly the buzz as far as the mutual fund space is concerned, the IPO market is concerned, and the D Street is also concerned. We'll continue to get you such fascinating insights with top market experts joining in through the course of the day. So stay tuned with us. Beyond the What's Hot edition, you will see the market coverage continue. And of course, I'll be back for daily calls at 12 noon to answer all your stock related queries. Join in for that too.